Good morning, and thank you for joining us for another Sales and Marketing Fry Talk event. Every second Friday, we share insights, best practices, and anecdotes from technology companies. The demand for cloud services is on the rise, and it creates tremendous opportunity for IT companies, and many of them are taking on that. However, not all companies are equally successful when it comes to profitability from reselling the cloud. So today, our special guest is Gabor Vass, who is helping many Microsoft partners to build a profitable cloud business. So welcome, Gabor.
Good morning, Andres. Good morning, Roland, and thanks for the invitation and for the opportunity.
Yeah, thank you for joining us. So before we start, Gabor, could you please help us and audience also to understand why and how exactly Microsoft works with partners?
Absolutely. And so probably you let me do in a following way that I've been in the last 8 years with Microsoft. And if I think back, how the cooperation, how the value chain, how the profitability discussion has changed in this last 8 years, it's really reflecting this whole, we call it like the cloud transformation story. So if you think about like the cooperation we used to have with partners was a relative simple model, if I may position this way. Mm-hmm. We created a product, we created an IP on Windows as an operating system, on Office as a collaboration platform for the Office server world with Windows Server, SQL, and practically the whole model was based on reselling the product. So it was very much like a transactional layer that we signed the contract with the customer via partner. And if you think about Microsoft has been always a partner-driven company. So in reality, also in the region, 95% of the revenue went through partners, always since we are working. However, I believe this whole switch to the cloud model not only changed the collaboration with the partners, but it also really changed the discussion about profitability and how to look at the profitability. Because think about the following. Now, first of all, when we create a cloud product, Microsoft shifted itself to a service-based company. Yes. So the objective behind this is that we are creating based on our IP, a product that we bring with the partner to market. But in the cloud world, it's essential that customers are valuing and using that product. And that sounds very, basic cliche topic, yes. But that was the big learning when we started to work, that it's not anymore the work that, you go to a big customer, you sign a big 3 years contract, and now you are covered compliant way with licenses. Yeah. It's not anymore the word. If you don't use E5 or you don't use specific complex product, then customer says, guys, why would I pay this monthly fee to you if I don't need it? So I think the fundamental shift that we experienced in the last years and the direction that we had, that without partner providing potential services, potential IP on top of our service, we are not going to be successful for a simple reason that customers practically don't use or don't value the full stack, the full capability of the product. And that was a big mental shift that realized that. And I remember back in like good old times 5 years ago, where we had this comparison that when customer purchased something directly, even from the website, or went it through a partner, we saw very quickly drop from customers from direct purchase, not using practically the capability of the product. In another word, when there was a partner behind the story, the partner interest was to attach services. And at the moment, our cloud product usage practically went up. So this kind of next layer of connection with the partners to ensure that we have a service attached, partner-owned IP. Think about Azure, like the infrastructure and the platform that we are providing. Without partner IP on reputable solution bringing, it's a simple infrastructure play. So partners are essential, and even more, we are higher dependent now how good the partner ecosystem is. And that's why I believe this whole profitability discussion that a little bit became also my not passion, I think it's not the right word, but I started to get deeper on this one because if you guys think about it, you can, and potentially you have this experience, you see really two type of partners, if I want to exaggerate a little bit. One type is still asking the question like, okay, but reselling Office 365 is not profitable. On the other hand, you see partners who have automated marketing lead generation capability, lead nurturing capability. They have a clean path of a customer that they would like to earn. And then they are claiming about 30, 40, 50% gross margin level on top of Microsoft. And I think that's where the discussion started to be also for me like, wow, so can we understand what are these guys are doing differently, or why this is different?
Yeah, that is very, very good point. And absolutely, thank you for bringing this to the audience as well. That partner, as we understand, like for the Microsoft specifically, and I think for many cloud vendors in general, become those who are making this kind of success for the clients, right? Because clients on their own not always are capable of really deploying these technologies or leveraging these technologies to full extent. So meaning that leaves a lot of room for questioning whether we need it, whether we properly use it, and so on and so forth. So for you as a vendor, it's important to have partners who are bringing on top of the platform some additional value to help not only you to sell this platform, but also customers to leverage this to the full extent, right?
Absolutely. And one more point on this, and I don't know how much the audience, I just try to give this example. Microsoft kind of has its own services team, which in some cases you can consider as our internal partner. And I remember it was also a very interesting transformation that, 5-8 years back when I joined, it was like Microsoft services are competitor. And what I see in the last 2 years, definitely, even Microsoft shifted this organization to a customer success unit. And the team job is to say that obviously there will be always, we call it like very complex flagship topics. Think about big national bank ERP system conversion to cloud, like core business conversion, where you need to ensure that the best expertise, the best potential people are. So instead of Microsoft going directly on this one, I see more and more activities where this unit is bringing partner. Because the reality that based on this project, partner can also gain knowledge and potentially can get activities that they can replicate and we can scale. Because I think the cloud model is about all scaling. You have this big project, but the reality, and I think that's the interesting thing also, if you think about what Microsoft became successful, you look at the company valuation, the stock price. In reality, and I think that's the name of the game, how you build up a recurring revenue stream that you can have a predictable cash flow for the future. I think that's the big topic that we see on the market, on company valuation, on merger and acquisition, on potential exit partners being sold to other one, that in reality, that's the biggest driver. Do you have a potential service revenue stream that you can see coming exponentially growing in the coming years? This is what's happening with Microsoft. We call it Cloud Solution Provider Program. But in reality, this is like how you can get to a customer engagement that you see that it's happening every month, and how you can grow that engagement. So the secret of Microsoft, I think I always tell this, that the secret of Microsoft stock, or the evaluation of Microsoft and many other successful IT companies are competitors. In reality, when you look, the same model appears for partners, that the question is how you switch from a project base. I'm going to a big project, I need 100 people doing an exchange server migration, to the point that how do I have 1, 10, 15, 20 customers who are buying from me reputable service? Spotify. Netflix. This is the same analogy. This is the same analogy what we do in IT, and that's
that is exactly what we also see, that there is a whole world of so-called SaaS companies. And if you speak, and we have many projects with some of the SaaS startups or already established companies, and they think in these categories what you just described, how much I can generate repeatable business, repeatable customers. And so their KPIs are all aligned to that: the customer acquisition, then how they can sustain this customer, how long it stays with the company, how much this generates the revenue in the long run, and so on and so forth. What is very hard still to find in very traditional IT companies' mindset. But what I wanted to ask you, profitability still might look quite different for you as a vendor like Microsoft or any other vendor on the market, and for the IT company who is reselling these services further to their customers. Could you help us to understand what are these key layers of the profitability for partners from your experience working with Microsoft partners all around Europe, and what they can do in order to maximize the profitability for them?
Look, the good news, and I think it was 2 years ago when I saw this paradigm shift. And I never forget, I had back in my Hungarian discussion one of the partner who was a competitor partner like 3-4 years ago, and then we convinced the team to come and work with Microsoft. But as we were kind of growing together with this partner, it was very interesting to get with the CEO discussion and getting reflection how they look at. And actually, this gave me the idea that if this partner, I can even name it. It was System Farmer. It's a Hungarian partner. I'm very proud of these guys because what they did represents me practically. What we always say, this is what we would like to see partner coming together and working with us. 2 years ago, I started to do guys, let's try to think about in a way. In reality, when you look at the financials, like I'm a CFO guy, the P&L is a P&L. So the first thing that we need to understand, and we need to start to work that, every investor, equity fund, owner is looking P&L in a similar way. P&L is not changing in a way. We need to talk about invoiced revenue. You have cost of goods sold. It drives you to gross margin level. Then you have the cost of sales, cost of acquisition. It brings you to the operation margin. And then you have, so the first thing that we did, I asked my finance people, please, can we go to specific partners? And we did go to Poland, to Ukraine, to Slovakia, to Hungary. And we asked partners who we saw that are successful. And we worked with them, with the 2 finance people, to say, can we look through the P&L of a specific project? Or can we go through your P&L and to understand what are, and this is, I think that was the essence, what are the Microsoft influential factors that we should pay attention to get practically a good end-to-end profitability conversation? Because I think that's the essence of the discussion, that 5 years ago it was I have this deal, the margin on transaction is less and less. That's clear. Don't take a mistake. And the rebate on specific old school product, on-prem product, I don't think we are paying a single dollar as a rebate. So if partner is stuck on the transactional area, somebody would like to get for me 10 Office. Yeah, but other partner can provide 10 Office and another partner, and it's publicly available, the price. So there is no really negotiation power from my side delivering 10 licenses. Versus partners who are getting on top of Microsoft revenue 1 to 2, 1 to 3, 1 to 4, in some cases on Dynamics World, 1 to 8 revenue ratio related to Microsoft revenue versus the services. So the big 4 points that we cannot find out, but kind of the learning is that as you mentioned, there are 4 big pillars that we identified. 1, your top line revenue, what you invoice. And on this topic, the key question these successful companies were coaching and asking themselves, or the finance person and the CFO or the CEO was asking the team, that is our top line revenue, our invoiced revenue, in line with the market growth? In another word, there are clear trends that, cloud is growing, everybody's talking about cloud.
Yeah.
But when you look at the number, the real question is the following. We see that, in the next 3 years, minimum double digit. In C, I think now the official number is 22% cloud addressable market growth that we are predicting. And then you can go into the details to say, okay, what about the potential product? I give an example on when you modernize an application, when you bring analytics solution, like these are the new areas where we see the growth is even higher. But as a rule of thumb, when you bet on cloud with Microsoft or even with the competitors, the question is like, do you see in your books your top line growing over 20%? That's the key coaching question, because the market is growing that. And even one of my learning and Andres Lauren, that was something that it always stuck me. The real growth every year is almost the double than the forecast, what we see in our books. And, we don't disclose any detailed information, but I think you can put together the picture by yourself in a way that, why is this? Because the market forecast, you can go quite good in terms of CapEx-based services. IT and big companies, they were very good adjusting that you can say that, this is going to be the addressable market going based on like CapEx. But this new word, the purchasing power that is shifting, the new word of bringing services, in reality, an HR person can set up a new workflow process. 2 weeks and getting for the underlying infrastructure layer, nobody budgeted. It's an OpEx-based service. So one of the key learning that we need to be very critical on top line and asking the question, is our product and service portfolio reflecting where the market is going? And the second question I'm always putting, like, is the vendor, and I'm not talking about Microsoft only, very transparently, is the vendor investing into that product area? Do you see, because in reality, if Microsoft is investing into end customer demand generation, doing these big demand generation activities, marketing, this massive digital activity that we get, the end result should be increasing addressable market, demand from the market coming to the area. So I think in terms of this first question is always like top line. Do you see this in your top line reflecting?
Yeah.
Then we go one layer deeper, and then we go to cost of goods sold. And then I think the key question is, and this is where the incentive and the rebate discussion comes up. And I think this is where the partners are super strong, and they know, 2.3% on this product if you sell this way. My learning is that it's very complex, and even I have to say, Microsoft rebate system is very complex. And I learned this from a Slovakian partner actually, and the guy, the owner, told me, look, we just don't look at project-based incentive. And I said, no, everybody's looking at it. I have a project, I need to know what was the rebate margin level that, we squeezed out from the vendor, and what is Microsoft. And he said, no. We are doing every project in a way that without rebate, it should be profitable. So we need to make sure that we add services, and that was a key word, that makes the project profitable. And I said, okay, and what do you look at to the rebate for? And he said, look, in reality, what I'm asking, the only question, my CFO, monthly or quarterly, tell me what is the rebate versus the Microsoft business. Does it help me? And again, use this financial term on return on equity. In another word, the owner said, look, I'm putting some money in euro as an investment to this business. And the one thing that I would like to challenge and check if the Microsoft rebate system is serving my return on equity.
Right.
Is there another alternative business, if I put my money, I get higher return on equity. So that was also, I was in a good way shocked, and this is something that I'm still learning and thinking about, but because this is a totally different approach. Not looking project-based rebate while Microsoft is giving, if you sell Azure, you will get this. If the customer is using 40% of the teams, then you will get this percentage of dollar investment. And guy coming up and say, look, in this new world, I don't care about project-based. That's my job to make sure that I have the services attached. That brings the service. What your job is to make sure that is profitable for me on the return on equity level. And that was again for me like, as I mentioned, very much like a financial discussion. And I think that's also one of the learning, that we need to ensure that we speak the language of the owners, we speak the language of the equity investors, because these guys are looking for annualized recurring revenue, company valuation based on ARR, return on equity, and it's not anymore the good old way. Is practically to see that, on this project, I won finally one big project and I get this. That's kind of the shift.
Yeah.
And here, and I think here comes the major point. As you get to the gross margin level, the biggest shift was, does partner have a reputable service solution that they can attach to the vendor, to Microsoft, to Amazon, to Google, to Salesforce.com, whomever you work with? That makes the difference. If you compare the gross margin ratio, pure resell is best case 5%, or in the good old times, it was like 10-15% margin level that you can fulfill in certain area. Project-based services, like when you do a deployment, a big project where you need to bring the asset, people, deployment resources, 20-25%. Once you move to this managed service world, or you can put your IP on top of the service, a replicable IP, a workflow that is not created for one company, but you create your own solution in a way that you can bring a fleet management based on power-ups, that you can bring to the all retail companies or car retailers in your country or across the country. That's where it makes the difference in terms of the profitability and the reality. When you look at the successful company's P&L, this is where the gross margin level grows above 30%, 30, 45. I see Roland's hand. Sorry, Andrea.
Yes, I wanted to ask you a question. I mean, if you were somehow, in some magical way, if you today were, let's say, a CEO of a small company, let's say up to 20 employees, Microsoft partner, doing something related to Microsoft, what would you do? I mean, to increase your profitability, would you be thinking about making money with reselling at all, or perhaps you would be thinking of how to make this small feature which you can sell as repeatable to large number of customers? What would you do?
And I think that's a good point, Roland, because it links to the final point of the profitability, which is like how you can work on your cost of sales and cost of automation, cost of acquisition, customer acquisition.
Yes.
And I think, Roland, the not simple but the painful answer on this one, that you need to find how you automate the processes within your companies. In another word, you need to ensure that you have a mechanism which is, and this is classic marketing, and this is, guys, where you are, even a better expert than myself. You need to make sure that you have an offer that you continuously bring you to the market. You have this like recursive marketing activity, how you develop your funnel, people who are interested, people who have potential qualification, how you drive a customer to a trial version of your product, and then how you deploy. So in another word, what I believe is the essence here, that you need to take, and what I experienced with partners who did it successfully, pick up one of your product where you are strong, where you are successful, and try to create a customer journey, which is like a framework. And you need to have a good answer on each of the potential step of the customer journey, how you are going to get potential interest, demand generation, how you do optic qualification, how you do valuation, what is your offer on proof of concept, what is the potential offer for the deployment, and what is the offer to keep the connection on managed service, on maintenance. I think the essence that I see companies being successful, and I think we learned, and I remember with cloud services in Ukraine, when we talked to the CEO, she said it was like a 2 years framework. Don't underestimate the cultural shift and the need you need to put into this area, because you also need to shift the marketing and the sales mentality. And it's a very strange thing. I have to be very transparent. I'm coming from a world where, well-dressed people shaking hands, looking deep into each other's eyes, you made big businesses. And now we are in a world where Microsoft is getting revenue on Azure platform over 10% from a digital platform where nobody is shaking hands. So this is also a wave that, this is marketplace. And you would say, guys, I remember these two quotes, like, you cannot sell this complex project to companies via phone. Myth. Reality, our Dublin call center is doing multi-$10 million. Myth one, you need to be in person with the customer to sell this product. Reality, over 10% already, and it's growing triple digit year by year. Partners are selling their transactable offers, their own offers on top of Microsoft platform, over $10-15 million size from this digital platform. That's amazing. So back to the point. The key point is that you need to start small and you need to have the skill set. So my proposal is always that pick up an area where you have your strengths and try to do this conversion to a service-based activity, aligning every step: marketing, sales process, qualification, workshops, proof of concept. And we can help on this only first on the area where you have the strengths. And when your team and your mindset has that, then you extend to the other. Don't start like, okay, because these are these big words like cloud transformation of my company, and it can be very difficult. In the cloud world, my experience, start with the product to convert into services where you have the strengths.
Yeah, very good, very good. I think we learned quite a lot of insights from you, and just maybe
I could talk about this for another hour, so
I can imagine. This is definitely the topic what we, can repeat and continue this conversation, because it's very kind of broad and has a lot of layers. Yes. But maybe just to summarize on what we have discussed. So basically, there are 4 pillars of the profitability anyone needs to think of and take a look. It's top line revenue and compare it with your market and overall cloud growth. And currently, you mentioned that it's more than 20% growth expected for addressable market in Central Eastern Europe. So it's a good benchmark to look at. Secondly, it's about looking at your gross margin and what type of services you can provide in order to go beyond just reselling the license. So how managed services are looking into this picture and so on and so forth. Then it's about COGS and incentives, and the tip you shared from one of your partner that they are looking not on the project profitability, but they're looking at profitability all up. And they look at return on equity instead of particular project profitability. And then it's about leveraging programmatical approach and scalable approach in terms of acquiring customers, nurturing those customers, and making them your long time customers, right?
Customer life cycle value.
Yes. Exactly. So thank you very much. I don't see any questions actually from the audience. There are quite quiet audience today, but okay. Yeah. Nevertheless, I think it was really very, very insightful conversation. and we definitely can repeat it and
happy
continue.
to continue and look to message. We will have Inspire, which is the partner conference coming 14th and 15th of July. So if partners are or the audience is interested, please make sure that you register, and don't forget to use the resources available, like company like yours, for example, IBD. It's a good example how you can outsource potentially marketing and sales things. And this is what I'm always like, use others' money. Try to think, you don't need to have like a big marketing department. You can outsource these things. So I think these are the things that you should take with you from the audience side.
This is a good advice. Yeah, good advice. Thank you, Gabor. And just before we conclude, I would like to also mention that for the next Friday, for next Friday Talk, we have another guest, and we will be talking about winning customers by making the career of own employees a top priority. And there is a joke, if you remember, that CFO asks CEO why we invest in employee training if they can leave every moment, to which CEO replies, but what if we don't and they stay? So let's connect next time, and we'll learn from Wim Dirks, the unit lead of 3 ICT, a technology consultancy company from Belgium, about how they actually grow their business by focusing on employee career first. Stay with us, and we talk to you next time. Thank you very much.
Thank you very much.
Bye.